So one of the biggest trends that's come out of personal finance in the past couple of years has been the popularization of high yield savings accounts, or HYSAs. Unfortunately, one of those bad habits that's come out of that is chasing the highest interest rates no matter what. I'm here to tell you that it's time to stop. A very special welcome back to the 2.8% or so of you who are subscribed. And if you're new here, I'm Raymond, a software engineer on the path to financial independence and retiring early. If that interests you, feel free to follow me on my journey by hitting that subscribe button. It really helps out the channel, so thank you so much in advance. Without further ado, let's get into the 2 reasons why I think that chasing the highest high yield savings accounts is a bad idea. The first reason is that a lot of these high yield savings accounts have strings attached to them, and they're often not very easy to spot. At this point, all the banks who are offering high yield savings accounts know their customer fairly well, and they'll advertise to them by giving you the flashy, big, high interest rate, at least the highest possible. But that doesn't always mean that you're actually getting that rate. And oftentimes, those conditions are not very easy to spot. And although some of these are a little bit more innocuous than others, say just setting up direct deposit, some of these can get pretty rough, like locking that interest rate behind a very, very high account balance. Now, I'm not saying that this behavior is exclusive necessarily to the smaller banks, but I generally find that it's the smaller banks that offer these super high, almost at the Fed rate interest rates that generally have a lot of these conditions attached. And for good reason. I mean, they wouldn't be offering you these interest rates if they weren't making money somehow either. The second reason why I don't really like this practice is that it's generally not worth it. Let's take an example of an emergency fund of $15,000 in cash at an average high yield savings accounts rate, nothing crazy right now, of 4.5%, that's going to net you around $56.75 a month. If we increase that to maybe some of the smaller banks that are offering 5.15%, you'll get $64.38. If we bump it up to the maximum that we can realistically get at 5.35% as of recording, that's going to be $66.88 every month. Adding it all up for $15,000 worth of savings, you're only getting at most around $10 a month extra. And what are these hidden costs of that $10 a month? Well, you've got the time that you spent opening up that account and managing those transfers. You've got the mental load of dealing with yet another account. And of course, there's no guarantee that your HYSA at your small bank is always going to be the top paying one. Is it all worth it for $15,000? I don't really think so for $10 a month. The caveat I will say though is that if you have a larger emergency fund or savings in general, say that you're a family of 4 with a higher spend, or you might be saving up for a house, because let's be honest, who really wants to buy with these interest rates? If that's the case, this 1% bump in interest rate might actually be worth it for you, but I'd argue for the most part, it really isn't worth it. The $10 a month isn't going to make or break a lot of our budgets here. And if it is, I'd argue that there are ways of getting that extra $10 a month without having to go through all these hoops of signing up for another account, waiting to get approved, getting that transfer in, and making sure that you're abiding by all their guidelines. But let me know what you all think, whether you're using one of these smaller banks or you're just doing a high yield savings account with one of these larger companies. For me right now, I have my emergency fund put in a money market fund with Fidelity, and it's earning a decent interest rate. Nothing crazy, but it's all right. And for the reasons that I just talked about, I won't be moving it anywhere else. But let me know what you all think and where you've parked your money. In any case, I hope you enjoyed. If you really enjoyed this video, feel free to drop a like or subscribe. It really helps out. So thank you so much, and I'll see you all for the next video.